In this video, I will share a detailed fundamental analysis of Celsius Holdings, and by the end of it, you will have a solid understanding of this company. If you were hesitant about whether to invest in this company's stock or not, I believe that after watching this video, your thoughts will become clearer. If you want to see more in-depth company and stock analyses like this, simply subscribing to my channel and liking this video is enough. So, let's get started. Celsius Holdings (CELH) is a rapidly growing company in the healthy energy drink sector. Over a 5-year period, it has surged by 2,474%, experiencing significant growth in the market, and has gained plus 34% in value since the beginning of this year. Currently, Celsius has a total market capitalization of $8.3 billion, and its latest closing stock price stands at $33.65. One of the most important data points I want to highlight is the company's margins. Celsius boasts a 50% gross margin, 11.5% EBIT margin, 10.7% net profit margin, and 17.7% free cash flow. These figures are exactly the kind that investors want to see. For instance, a 50% gross margin indicates the company's profit after deducting production costs, and this percentage is quite high. At the same time, the fact that the company retains 10.7% of its revenue as net profit even after all expenses is a strong indicator of financial health. Looking ahead, forecasts suggest that the company's revenue will grow by 20% annually through 2027. Additionally, Celsius has a 9.3% FCF CAGR, indicating stable growth in free cash flow and a strong cash position. Analysts predict that over the next year, the stock price could drop to $26 in a worst-case scenario, remain around $39 in a standard case, and potentially rise to $69 in the best-case scenario. Of course, these are just analyst predictions, and even better results are possible. There are a few other important aspects of Celsius to consider. Since the company does not yet pay dividends, investors can only profit from stock price appreciation and future growth. Moreover, the company's 2024 dilution rate is 1.5%, meaning that Celsius issued new shares in 2024, which led to a slight decline in stock prices. This drop in stock value can be attributed to the newly issued shares rather than any fundamental issues within the company, helping us analyze the situation more clearly. One of the most striking aspects of my analysis was the company's 20.5% ROIC, or return on invested capital. If you're not familiar with what this means, let me simplify it. The company generates a 20.5% return on the capital it invests. This is a highly impressive figure. Another highlight is that Celsius holds $890 million in cash. For a company with an $8.3 billion market cap, this amount of cash is a positive signal for investors, as it ensures the company has sufficient liquidity to maintain financial stability during crises. Currently, Celsius has a P/E ratio of 78, indicating that the stock is considered highly valued based on earnings per share. However, the part of the analysis I was most excited to share is Celsius's growth statistics. Since 2020, the company's revenue has increased more than 9-fold, a staggering 937% rise in less than 5 years. Can you believe it? These numbers are extraordinarily high. Similarly, earnings per share have grown more than 10-fold, exactly 1,036%. Meanwhile, free cash flow has experienced an unbelievable surge, skyrocketing by 8,390%. As we approach the conclusion, it's important to note that 83% of Celsius's revenue comes from the European market. I also want to discuss the risks and opportunities associated with this company. Celsius aims to expand its market share by acquiring the Alani acquisition brand, which can be seen as a new growth opportunity. Additionally, the company's expansion into international markets and the increasing demand for energy drinks are positive indicators. I believe the stock is risky for short-term trades due to its high P/E ratio, but in the long term, it has strong growth potential, especially after acquiring the mentioned brand. A major risk factor for Celsius is competition from industry giants like Red Bull and Monster. Currently, Celsius's stock price is above $30, and in my opinion, the best entry point would be in the $25 to $30 range. Keep in mind that the information I shared is not investment advice. I am simply sharing my thoughts to broaden your perspective. This video is for informational purposes only. To summarize, Celsius Holdings (CELH) is a high-growth company with a high valuation. Its expansion into international markets and the Alani acquisition are expected to strengthen its growth trajectory. However, the high P/E ratio and competition risks must also be considered. There is potential for long-term investment, but buying at lower price levels would be a more strategic move. As I always mention in my videos, here's a small reminder: if you want to earn up to $30 in free cryptocurrency or stocks, be sure to check the pinned comment in the comment section of this video. And always remember, an investment of $100 today could make your life 100 times better in 10 years.